The net interest income and the net interest margin of the bank has improved in this quarter, while other banks have seen some deterioration. So, could you walk us through the growth and what you are finding on the ground in terms of demand for credit, in terms of deployment and disbursement of credit?
Yeah. To first give my thoughts on the industrial trend, industry economic trend, yes, there has been a demand suppression for quite some time, and all banks supported by the government, they are trying to revive the demand. And I hope tomorrow's budget will have certain, from supply side we are almost done. But from the demand side, I think this budget will have a lot of takeaways for demand side to revive the demand. I am sure this 6%, 7% growth, what we are seeing currently, it will bounce back to original double-digit growth. As far as Bank of India is concerned, this Q3, I think our major highlight is we continued to be in the profit zone for the fourth consecutive quarter, to some extent also helped by some extraordinary resolution process, but core segment also we have done well. We maintained the asset quality, and we have improved our operational efficiency as evident from key ratios. So that's the takeaway. So I think Q4, we hope we will be able to sustain this.
What is the strategy on retail growth now that it's 50% of your book, and what is the strategy on the corporate lending side?
Okay. I will come to the retail growth part. Yes, retail at 10%, still it's not the best, but it has grown relatively better than the other segments. And within retail, home loan and vehicle loan, they have grown. But we are also at this juncture, we are also targeting other segments. For example, we have already got 31,000 crore sanctions in select NBFCs, and more so in the government segment accounts, state government and central government accounts, and NBFCs which are predominantly PSU backed. So I don't think it's a matter of time before the disbursal start picking up. And we are also currently having about 12,000 crore in process of sanction. I feel at the end of the year, we should be able to see through a growth of 8 to 10%.
So even in the retail segment, housing loans and vehicle loans were growing steadily over the last year. And then I think after the economic slump and the consumption slowdown, that also reduced. And in turn, the banks have been growing their unsecured portfolio faster. So if the breakdown of the retail loans, could you just give us a insight into what that like?
Out of about 50,000 crore, I think about 35 or 36,000 is our home loan. That is the bread and butter in retail. Okay. Plus, we have the vehicle loan portfolio. And we have various LAP. For example, LAP, we are taking a cautious view. So LAP is on a progressive decline. We are not encouraging much also LAP. So these are the two things, plus up to 5 crore LRDs, lease rental discounting. That also we are trying to, because gone are the days, I feel, when we cannot rely only on chunky advances. We need to grow the core segment, that is the RAM plus our prime credit, what we call 5 to 25 crore. So I think these are our focus segments. I'm sure this will only drive our growth.
When do you think there will be a revival in CapEx, especially from a credit pickup standpoint?
I think going by the present recent IIP numbers, where we see manufacturing, capital goods growth invariably indicates the CapEx and other activities. As for Bank of India, we are ready to finance, and yes, we are taking all possible measures to make sure that the quality of advance also is good. We are open, we are having discussion with many prospective borrowers. Absolutely, we are open to it. And I think this cycle, already green shoots are visible. And tomorrow's budget also will unfold, I believe, many pleasant surprises. I think from Q1 of next financial, it should be business as usual.
So the non-performing assets of the bank has remained stable on a year-on-year basis at over 61,000 crores. On a ratio perspective, it's 16.3%. What were the recoveries, slippages, write-offs this quarter, and what is your outlook on the NPA cycle, given that the big chunky exposures have been resolved, most of them?
In fact, in absolute terms, our gross NPA has come down, despite the fact that almost 6,500 crore have slipped in this quarter. And there I would like to underline the fact that our slippage management has been pretty good this time, because this 6,500 crore also included three major accounts, which accounted for about 5,000 crore. So in effect, and those accounts have affected all other banks too, most of the banks. So in effect, if you see, there has been a slippage of only 1,600 crore compared to about 3,200 last quarter sequentially. That way our slippage management has been quite good, and we wish to continue the same thing. Now on recovery, our focus these 2 months will be more on recovery, both under our OTS scheme and the new board approved discretionary and non-discretionary policy, where we would like to effect maximum possible recovery. Plus, of course, NCLT, we had a good Q3, probably that was the peak. Q4, we are not seeing much traction, but at least 1,000 crore we are aiming. From about 2,300 crore of our stock, which is referred to NCLT resolution, I think we are about to get about 1,000 crore. So I think that should make our thing around 15 to 15.5% from March quarter, okay. And we will continue well below 6. This time it is marginally below 6. I think 5.85. That is what we will end at March.
In terms of those 3 accounts, these are the NBFC, HFC, telecom players, or NBFC, HFC? And I just wanted to understand, what was the recovery in Q3 compared to Q2?
Compared to Q2, Q3 recovery has been pretty good. In fact, it is manifold, I should say. 3,000 crore almost we have recovered, okay. Compared to even 3-digit number in Q2.
So what is the total NCLT exposure of the bank as it stands?
As on date, it is about 37,000 crore. Okay.
And your outlook on that recovery, you said 1,000 crores you're expecting that will be recovered this quarter, this coming quarter. Yeah. But the overall outlook on the 37?
Overall outlook is we have on an average for NCLT 1 and 2, our 5,000 crore, we are 100% provided. And the remaining are NCLT filed by us and other banks. So overall our weighted provision there is 78%. I'm sure a lot of traction is happening these days, especially after Q3 success. Q4 we expect a lot of accounts will be resolved.
Okay. And so one concern that many people are raising now, especially analysts, is that retail loan NPAs are going up, at least because of the consumption slowdown. You've seen some impact, not marginal impact, but there is a trend upwards. Are you concerned about that? Are you changing credit underwriting due to this?
There is no great concern on this. Yes, there is slight deterioration that is happening in every bank, because all the banks, they are focusing predominantly on retail. And again, when we see retail portfolio, we have to link it to people's purchasing power, propensity to pay up. We have found out certain ways, for example, linking up their operative accounts. Earlier, people used to be sanction housing loans in standalone kind of thing. Now we have started a movement where, to the extent by at least 80% of our retail loan customers, we are trying to link it to our operative account. So that will also, in a way, ring fence the cash flow, and there will be automatic flow of inflow into the account.
Another thing analysts recently pointed out is that the mergers of PSBs is coming up. You're one of the banks that weren't included. So just want to understand, is that going to be a competition for you all, given that the merged banks may have a higher capital base, lower credit costs or deposits?
I think it's better not to speculate on the thing, but we are prepared for any eventuality. Definitely there is some thought process behind the amalgamation that was announced recently. And yes, competition is always good. We believe competition is always good. And again, my take from this amalgamation is twofold basically. How to retain the customer convenience, and second is majorly how to derive cost efficiency. These are the two factors that will provide a lot of synergy in amalgamation. I think should not be any problem.